Hello everyone. Today is a very special day, and today I want to open the gold mine of information and knowledge and experience that I have accumulated over the years of trading and investing and generally in the field of finance. So I created a lot of content which was actually directed to traders and more of swing traders. Now the feedback that I got is, please share us the tools, the techniques, the strategy that you use in order to make money. And when I look back and when I see, it's the best thing that I can give. So I have a lot of observations to make. The observation is 90% of the traders actually do not have an edge. For becoming a consistently profitable trader, you need to have an edge. And edge means you know something about the markets that majority of the percentile people don't know. Now that may come through a lot of means, and I personally like to analyze and do the hard work rather than going through illegal means. So my approach is based on hard work, observation, analysis, etc. So there are three main important branches of study in financial markets. Some of them may be very good with reading balance sheet, reading, profit and loss statement, listening to earning calls, and then making a actual conviction with that bet. The thing is, that branch is called as fundamental analysis. And I am of the opinion that fundamental analysis proves itself right over a longer term. Then there is another branch of study which is called as technical analysis. In technical analysis, people study about charts, people study about the price action and its correlation to the actual events. So technical analysis is something that most traders use in order to predict where the markets are going to go. So the very main thesis of technical analysis is everything is baked into the price. So if price is at a certain level, there is a reason why it is at a certain level. So that is the second branch of study, which is technical analysis. Then there is a third branch of analysis, which is called as macro analysis. So if somebody knows, the economic policies, if somebody is really good with geopolitical situation, then they will be a very good macro investors. So they know overall what's going to happen, and then they will select that particular sector and then bet on it. So these are the three major branches of, financial markets that people choose to actually study and master. So me being a trader, I choose technical analysis. And in technical analysis, to call ourselves a trader, the most fundamental and important thing that a trader needs is to have an edge, to have a system, to have an algorithm to actually, quantifiably say that over the course of, let's say, 50 to 100 trades, you will be consistently profitable. So that edge or that set of defined rules and that strategy should be very, very clear and, priorly defined. So today, my plan is to actually share the tools, the techniques, the strategy for you guys to actually have a concrete pathway to profitability. So when I say strategy, or when I say playbook, or when I say system development, all of these three terms means the same. Basically, these are concrete steps that you will be taking for your decision-making process, either to buy or either to sell. So I have divided this video into a lot of parts because I plan to share each and everything in a lot of detail so that you guys can actually have an idea about how the strategy is made, how the system development process happens, and what are the tools at your disposal that you can use in a certain way to actually be profitable. So today, I wanted to share all the technical tools that I use in my trading, including the indicators, including the settings in those indicators, including the different types of charts that I use. For example, candlestick charts, for example, tick charts, footprint charts, and a lot of other layouts as well, as for example, cumulative delta charts. So don't worry, I will dive very deep into these things and explain each and everything with live demo. I will also be covering multiple time frames. Why? Because when I do trading, I take a lot of data from multiple time frames. For example, weekly, daily, 1 hour, and 15 minutes. I also will explain different weightage that you have to give to different time frame levels so that you know the precedence and importance of each time frames. Then I will also discuss correlated assets. So when I'm trading Nasdaq futures, I also track very closely the QQQ instruments. I also track very closely the volatility instruments like VIX. We track VIX, that is VXN, that is volatility, specifically tracking the Nasdaq index. So I will also discuss its correlation to the Nasdaq markets. Some of them like QQQ is directly correlated. Some of them like VIX is inversely correlated. So when I say inversely correlated, if VIX goes up, then the Nasdaq market ideally should go down. So that's what I mean. I will discuss it and how you should look at it, why you should look at it, and also getting confirmations and building up your confidence and conviction on your trade. So there are a lot of data points that I'm going to discuss, and there are a lot of things that you need to consider while making a decision making mind map as to if you have to buy or sell. I am also going to share my personal screen layout. So how many screens do I have? What charts do I place on those screens? How am I doing that layout so that your decision making process becomes easy and intuitive? And the reason why I set up all those things in a particular way, I will share the reasoning behind it as well. So I'm very, very excited today to share you the actual holy grail and my system, which I have developed over the course of 4 years. And right now I'm, willing to share everything so that you have a fair idea of what actually is trading and what it takes, and on an actual basis, how it's done. I will also be sharing my own trading system or the strategy, like why I choose to buy, why I choose to sell, in what scenarios, at what time of the market, at what market structure. I'll also share all of these. Then I will share some important aspects of system development, that is position sizing and risk management. So, and in what circumstances am I going to increase my position size, or in what circumstances am I supposed to decrease my position size? What is my level of conviction that is making me, doing this position sizing? So I will explain all of that as well. I will also talk about some things that you can do to manage your risk. I will talk about the tools, about various types of orders, about various type of trailing stop orders, and a lot of things that you can do to manage your risk, to manage and minimize your drawdown. So I'll also talk about that. And then at last, I will put all the tools together in a synergy, and I will share, we will do a lot of backtesting. So once I explain the entire system to you, once I show you all the tools and how it is done, I will also put that actual system to the work and show you the testing of it, and we'll backtest this entire system for multiple days so that you can get a glimpse or a gist of how the system actually works in a real world scenario. So we will backtest it, comprehensively, and then finally I will also share a lot of miscellaneous points and a lot of recommendations for what platform to use, why do I use it, everything. So grab your coffee or anything, because this is going to be a really long video, and I promise that it is going to be a fruitful one, and this is what it takes to become an actual pro level trader. So enjoy, and let's jump right into the nitty-gritty parts of it. So now that I have shared that I'm going to share the strategy and the actual game plan, it is very important to know that in the markets or on social media or on books, you have thousands of strategy. So you need to know, like, that strategy, where it is actually profitable and where should I apply. So I want to discuss what instruments will I be using to trade in order to be profitable using this strategy. So the instrument that I personally use to trade is Nasdaq Futures and S&P 500 Futures. So over the course of last 3 to 4 years, I have observed the price action of these two instruments very, very closely. And thereby I have developed a strategy on those instruments, and my strategy works best on these instruments. So there are a lot of advantages when it comes to Nasdaq futures and S&P 500 futures, and I want you to understand some of this in a very deep level. Now the first advantage is both of these Nasdaq futures and the S&P 500 futures instruments are highly liquid. So when I say highly liquid, what do I mean over here? The meaning is these instruments get traded every day in a very large amount. So the total volume of trading in each single day of trading these futures is very high. So if I talk about specifics, Nasdaq futures on an average is traded around 600,000 contracts in one day. So let's say you want to get into the position or get out of the position, you can easily do it without having a large effect on the price. So that is very big advantage, as I will be discussing this in future. So this Nasdaq futures is the daily volume is around 600k contracts, that is 600,000 contracts. If you talk about S&P 500, it is 3 times much more liquid than Nasdaq. So S&P 500, if you look at the volume of each single day, then 1.5 million contracts are traded every day in S&P 500 futures. So that is even more liquid, 3 times more liquid. Now both the instrument has its own pros and cons, and the liquidity is just one thing, but the amount or the degree of volatility also varies significantly. So Nasdaq instruments is highly volatile, and the S&P 500 futures, if you compare the Nasdaq's volatility, it's a little bit less. So if you want a stable instrument to trade, then S&P 500 is much more recommended. And if you want to have a volatile moves and a lot of movement, then Nasdaq futures are much more, highly positioned to do that. So I normally prefer Nasdaq futures because you get a lot of movement, and I always say that volatility is the food of traders. If there is no volatility, then there will be no traders, because without volatility, traders cannot make profit. So that's my take on the instruments. Also, one other advantage is all of these, like Nasdaq futures and S&P futures, they have a ultra low spread. So what do I mean when I say spread? So when you want to buy any instrument, you buy at a bid or ask. So that bid or ask should be as close as possible. So when I say bid, it is the highest amount of, the closest to the last traded price that a buyer is willing to pay. And the ask or the offer is the closest amount where a seller is willing to pay. Now, if the difference between the bid and the ask, or the bid and the offer, is less, then there are very high chances that you get a better price for your order. So if you talk about, index futures like Nasdaq and S&P, there are ultra low spreads. So you don't even find like, minimum, 3 to 4 ticks of spread. Even that is very big thing. So you get the price level to enter the exact price level that you want to enter. So that's a very big perk as far as trading is concerned. And also, if you trade the individual equity, futures, then it is very volatile. For example, if I trade, individual company futures, like if I trade Apple futures or Google futures, then there is a very high chance that since this is an individual company, it may, be volatile like crazy. Why? Because it directly is sensitive to the, company events or, news or anything. But if you talk about the index futures, then the degree of volatility as compared to the individual company futures is very low. So you get the best of both worlds when you trade index futures. So that is why I highly recommend to trade only index futures as opposed to the company futures or the actual individual, names. So that's one of the biggest advantages. One other advantage is if you trade the index futures, then it is very easily available to trade on almost all the platforms. So when I say all the platforms, when you open a brokerage account or when you open your securities account, your broker is very there is a very high chance that they will offer the index futures trading functionality. So you don't have to actually go and open new accounts. Most of the big brokerages in USA offer this kind of functionality. So that's one of the key advantages. And lastly, the reason why I recommend futures is because it provides an inbuilt leverage. So we are young people, we are the people who wants to build capital. So I always say trading is for building that capital, and investment is for growing that capital and is for safeguarding that capital. So to do investment, first you need to have some money to do it, right? That money is going to come from trading. So it's your job to maximize on those bucks. So the only way you can maximize those bucks is to actually have leverage. Now futures are such kind of instruments which gives you inbuilt leverage. So with a very small amount of margin, you can trade higher amounts of leveraged instruments. So this is a very big advantage. Now I told you the pros. Now the con side is, if your conviction or if your trade goes against you, then it is equally bad. Why? Because now it's a leveraged bet. So the loss are equally bad. So that is why, having a consistently profitable system is very important, and to have an edge is very important, so that you can maximize the benefits of leverage. So that is why I recommend futures for the traders who are consistently profitable and who want to level up their game and thereby improving their gains by a factor of 10 to 15. So that is the reason why I trade these instruments, and why I select these instruments to trade. So this is to give you a gist of my strategy and where to apply it. The main thing to the instrument where you can apply is Nasdaq Futures. For those who are prone to emotional swings, and for those who don't like volatility that much, they can go with S&P 500 futures. So that's what I wanted to share, that I'm going to teach you the entire strategy, but if you don't know where to apply, then that is a problem. So this is what I wanted to share. This is where you will apply this strategy. And now let us uncover each and every detailed chapters, and let's start with the basics of my strategy, the trading platform, the indicators, everything that I use. So let's go and jump right into it. So as discussed, let us now concentrate our attention to the configurations. So basically I wanted to show you each and everything in detail. So let me start with the setup that I have and the configuration that I have. So I use a very high-end MacBook Pro, and I know that I'm going to offend a lot of people when I say, okay, buy a highest end configuration MacBook Pro because you don't need it, or it's too much and you can do without it as well. But I have traded for last 4 years, and believe me, the amount of compute that you are going to take from the computer is not that simple, and it's not that easy. So that is why I recommend that buy the highest end configuration MacBook possible, so that all the systems that you run, all the softwares that you run, all the formulas and all the indicators that you load to your charting software runs very seamlessly. And the reason why I say this is because day trading, time is everything. So in day trading, you need to have very low latency periods wherein all your data is loaded super fast. So with that being said, it's not necessary that you go with highest end spec'd out MacBook Pro. Base level MacBook Pro also works as long as it has the latest generation of their CPU. Now the reason why I say this is because I personally use MacBook, and I use a lot of other virtualization software on top of it to get my trading decisions. So I will share all of this, but the thing is, as far as the platforms are concerned, there are, two types of platforms. And most probably, you will also run only, two types of platforms. One is the research platform. And the research platform is because that's the platform that you use to do all your research and analysis. And the second is the execution platform. That is the platform that you use to actually place your trades. So that platform needs to be very, very highly efficient in terms of speed. So in research platforms, I use two. One is the tradingview.com or TradingView app, and the second is the NinjaTrader research platform. Now you may say, okay, for the charting you are using TradingView. Why are you using NinjaTrader? So first and foremost, TradingView, just a little bit of history, it was designed and developed in a way keeping in mind about the retail traders. So there are lots and lots of essential features that a day trader needs to succeed, which TradingView, unfortunately, as of the time of the recording of this video, doesn't give. So for example, TradingView doesn't have tick chart layouts. TradingView doesn't have footprint charts layout. TradingView doesn't have a lot of good indicators like volume profile and cumulative delta and all those things. So these things are essential for the success of the trader. And coming on to the engineering problem, there is a lot of coding and engineering that needs to happen, and a lot of resources that are needed for the compute of these features. So normally, the base level research platforms doesn't give you that. And that is where I come to NinjaTrader. So my brokerage account is with NinjaTrader, and they have a really nice, very in-depth, research platform and charting software from the NinjaTrader itself. So NinjaTrader platform comes in two flavors. It's a web-based platform and it's a desktop app-based platform. The only limitation is the desktop app platform is only for the Windows users. So it is designed for Windows OS operating system. So I have a tweak for that, and normally what I do is I have Parallels, that is Parallels Desktop is a virtualization software, and on top of it I run Windows 11, and in that virtualized Windows 11 I run the NinjaTrader research platform. So that's about the research platform. And coming on to the third platform, that is the execution platform. So the execution platform that I use is Tradeovate. And I use Tradeovate because it is very simple, it is web-based, and it is very fast. So I normally use Tradeovate, and because I was working with a lot of prop firms, they also use Tradeovate. And Tradeovate supports CQG data, so I really like Tradeovate. So with all of that, there are web-based and app-based and browser-based features as well. But I normally, prefer the actual application installing, on the MacBook for the TradingView, and same for the NinjaTrader platform. The reason why I do this is because there are lots of features that are only available at the app. So I normally choose to install the app, the whole version of the software, rather than accessing that software through the web-based platform. So as you know, Google Chrome, if you open a lot of tabs, it uses a lot of resources, and I want to, make the trading setup as efficient as possible so that you get the best results. So that is keeping in mind, that is the nature. So let me show you one by one what do I mean over here. So if I go to TradingView, so this is my TradingView app. So this app, I normally use this app-based version. So you can also go to Google Chrome and log in using the TradingView, and you can see all the features and everything. So TradingView, I normally started my trading career using this platform. So this is the base platform in which I do my research. So in this TradingView platform, I can load a lot of indicators over here. I can have multiple chart layouts over here, as you can see. And then I can also have the template for my strategies. So this is all the templates that you can see. And these are the indicators. There are lots and lots of indicators which are inbuilt from TradingView, and also from community scripts, like other people writing scripts and giving it out for free. So there are a lot of things, and again, for the beginners, I would suggest or recommend TradingView because it has a lot of documentation as well. So if you go to indicators, and if you hover over any indicators, right, and then you go to the script, so it gives you a lot of details. So for example, let's say I want to go to autofib retracements, right? Then this autofib retracement, I see over here. But when I go to three dots over here, and when I go to help or something, it gives me a lot of information. So for example, if I go to about this script, and I can see each and everything, how is it calculated, what are the settings that you can do, what will be the options that you'll have to tweak. So all of these things you can see. So for a beginner trader, TradingView is a very, very good place to start with the technical analysis research. It has a lot of different time frames and a lot of other functionalities that I really like. It gives you the status, everything. There is a plethora of things that you can do. You can backtest, and you can do a lot of things. So this is the TradingView software that I use. So now the time has come to finally reveal all the technical details of my charts, my indicators, and the detailed settings and configurations that I use. So to start with, I first started with the candlesticks. Candlesticks have derived its meaning from Japanese candlesticks, where they used to plot in a certain level. So the way it used to be is you select a time frame, and then you actually have the open, then close, then high and low. So I use candlesticks with their conventional color, that is green for the up and red for the down. So apart from that, the main technical indicators that I use is leading and lagging indicators. So many a times, indicators are nothing but the mathematical formula or statistical averages or something that is derived from the calculations of price. So it is very, very highly probable that you will see any and every indicator which is derived from the price. So it is some form of a modified calculation from the price data. So that's very important to understand, and the basics of it, so that you can build a good foundation on. As far as technical indicators are concerned, I have divided, or I should say, there are two key fundamental concepts regarding technical indicators. Now, one type of technical indicators is leading indicators, and other type of indicators are lagging indicators. So to give you an example, EMAs, that is exponential moving averages, Bollinger Bands, anchored VWAP, or Z-Lima, all of those are lagging indicators. And the reason is it derives and it gets plotted on the chart after the price has taken place. So it derives from the price action, and that is why it looks at the past data, and then it gets plotted on the chart. So price is much faster than the indicator itself. That is why it is called as lagging indicators. And there are other type of indicators like pivot points, or like Ichimoku cloud. All those indicators are leading indicators. So even before the price action has taken place, it can give you a very highly probabilistic approach of where the price might go. So that's the difference between leading and lagging indicators. So I, as a trader, I rely on both things, technical leading and technical lagging indicators as well. So the actual indicators that I use in my charts are these, the EMAs, and the type of EMAs I use is exponential. So there are two types of moving averages out there. Actually, there are many, but predominantly there is a simple moving average, and then there is exponential moving average. Now, the simple moving average is nothing but a statistical average of the period that you select. So for example, if you select 5-day EMA, then it selects the past 5 days data of price action, and then it takes an average, and then it plots on the chart. Now, the reason why I don't like the SMAs is because they give equal weight to the entire data set. So for example, if you have a 5-day data set, then you give equal weightage while taking an average and then you plot it on the chart. But when you do an EMA, that is exponential moving average, you give the precedence and a slightly higher weightage on the latest data rather than the last data. So for example, if I have, let's say, a 5-day EMA, and if I have selected the exponential moving average, then let's say if the 5-day starts at Monday, then the Wednesday, Thursday, Friday data would be given much more importance and much more weightage as compared to Monday and Tuesday. So this is why this is the reason why I tend to prefer exponential moving average, because my thesis is I give more importance to the latest data and less importance to the older data. So that's my take. So the configurations that I use is 5, 9, 13, 26, 50, 100, 150 and 200. So you might ask, like, what is the reason why I selected these numbers? So these, time periods, that is 5-day, 9-day, 13-day, act as a strong support and resistance as far as market action is concerned. So when the prices are above 5-day, it is a measure of the shortest term sentiment. And when the prices are above the 50-day, it is a measure of a birth of a trend. So that's there is a significance to each of these moving averages. So the 200-day EMA acts as a long-term trend and a confirmation of a long-term trend. So a lot of times you have to have a good screen time and a good experience in using these averages, and also how these averages interact between each other. So what does a crossover mean? The crossover from a short-term and a long-term moving average from above is going to be bearish. But if the short-term moving average crosses over a long-term moving average, that may signal a bullish sign. So that's the key takeaway from the moving averages. So let me actually show you how and how I do my charting using the EMAs. So this is my trading view platform, and this is my 5-minute time frame. And the reason why I am showing this is because I want you to show the color coding and the reason of all those things. So I expand my indicator set list. And as you can see over here very clearly, I have 5, 26, 9, 13, 50, 100, 200, 150, and Z-Lima. So if I go to settings, then you can see that I have selected the source as closing of the candle. I have selected the indicator time frame as the chart. So if I zoom out and zoom in like this, then it will automatically adjust the calculations accordingly. So this is the setting that I have. The blue line is the shortest term sentiment over here. There is a deep science for each of these colors as well, which impacts your psychology and which impacts your brain, because the moment you see red, it has a different impact on your emotions. So all of these color coding schemes have been really thought of, not only in terms of statistical calculations, but also in terms of psychological effect on the trader. So this is very deep, but I wanted to share each and everything of my decision making process to make you guys a really good trader. So that's my settings for the 5-day EMA. Same way I will show you each and every settings. So this is the 26-day EMA, and I have done the red color over here. Also for the 9 EMA. Now the reason why I have selected lighter shades for the 9 EMA, it's because many a times these some of the EMAs are much important than the other EMAs. So I have done the color coding accordingly, so that the process should be so much intuitive and ingrained into your brain, so that you it aids you to take faster decisions, because intraday is like driving a Ferrari. So if you are having a lag in processing, then that is not good. So that is why I have selected the color cyan over here for the 9-day EMA. Then for the 13-day, I have selected a green candle, green color. So as you can see, this is the settings. And the reason why I am opening all these settings to you is because you can take the screenshot and you will have no doubts of what options to select and how to configure each and everything. So that's why I am showing you these things. So this is orange, which is a line in the sand, because 50-day acts as a very strong support and resistance zone, in the medium term. So that's why I have selected this. And then you can see 100-day as violet, because it helps to know where the actual zones can be. So as you can see over here, these are the settings. For the 200-day, I have selected this pink, or I would say, kind of pinkish red. So over here, these are the settings. And then for the 150-day, I have selected this, and over here, I have selected this. So just take a screenshot if you have any doubts regarding this. So this is all about the EMA. Now let me discuss the other things. So EMA is done. So now I also use Bollinger Bands in my study. Now why do I use Bollinger Bands? So you have to know that markets have a certain behavior. Now if a market is acting really weird, then statistically you need to know what can be the limit of market going in a out of standard deviation way. So if there is a way to calculate it, there is a standard deviation of 2 that I prefer. So over here you can see Bollinger Bands are a very good tool to measure the depth of volatility. Like if it's volatile, then how much volatile it can be. So over here you can see I have configured this Bollinger Band as a transparent cloud, and the settings that I have done for the Bollinger Bands is the basis of a Bollinger Band is yellow, the upper and the lower bound is this color, and the settings that I have selected is 20, and the source is close, and the range of the standard deviation, that is I go to the standard deviation of 2, that is 2 levels of standard deviation. So I have selected this. So all these settings are for the standard deviation. So if you can see over here, every time the price goes to the standard deviation, it reflects back. And look at what happens in the lower time frame on the downtrend. When the price goes down, it halts near the lower end of the Bollinger Band. So it tells you the amount of volatility that you can expect, and that's a very nice indicator, and I will show you in working as well. But I wanted to discuss all of these first, so that you can configure it on your charts, and then you can play with it and you can see it by yourself. So the next thing that I wanted to discuss is the anchored VWAP. Now the anchored VWAP is over here. So it's over here. So this is the anchored VWAP, and as you can see, I have auto anchor period as auto, and I have selected the high low close 3 the combination, and I have selected the period as 14. And as you can see over here, I don't do anything else apart from this. I just use the anchor VWAP. Now the reason why I selected this indicator in my analysis is because you need to know how the markets work. You need to know what are the key players and how they function. So for example, first of all, markets are moved by big players, hedge funds, pension funds, big Wall Street banks. And the way they do the business is, let's say if I'm a pension fund with billions of dollars, and if I want to buy a security, there is no way that I can buy at a single price. If I place a market order for worth of billions of dollars, then the price will be shot up because of the auction market theory. So if I have to actually create a position, and that to a massive position, then I will tell the hedge fund or a broker that, okay, give me the best price possible. So if he has to give me the best price possible, then he has to actually know that what is the current average price for the entire day, and is the final price that I receive is above that average price or below that average price. So when the institutional buyers see that the price is above the VWAP, whenever the price retraces to the VWAP, it will bounce, because those players will try to buy at this price. So this is just a background depth story of what is happening behind VWAP and why the VWAP is important. So I will create a dedicated video for the VWAP and actually show you how the things work. But for the purpose and the scope of this video, you just have to know the settings that I use over here for the VWAP. And as I showed you, take a screenshot and do the configurations accordingly. So the next indicator that I wanted to highlight is the pivot points, and I use a lot of, I use pivot points as my go-to and a very important indicator in my strategy as well. So the pivot points are the statistical calculations of, averages, which considers the closing price and the, average price of the previous day. So as you can see over here, if I go, so I use two types of pivot points. One is the standard and other is the Fibonacci pivot points. Now the standard pivot points are I have highlighted as these solid gray lines and the dark solid red lines and the dark red lines, and the light red line that you see over here is the pivot points line, but that is Fibonacci line. And the reason why I do the light color coding on the Fibonacci and the strong color coding for the standard pivot point is because these Fibonacci points tend to hold, it's a weaker support or resistance, and the standard one is the stronger support and resistance. So you will see everything in this everything in action when I show you. But normally what is pivot point? Pivot point is, according to the name suggests, pivot is a point in a market where the market can turn on and off from that point. So when the prices approach these levels, there is a high chance that it will reverse its course from that point. So what do I mean? Pivot points gives you three things. One is the P0, that is the neutral average point. And above it, it gives you R1, R2, R3, and so on. And below this white line, you see S1, S2, and S3. So these S1, S2, S3 stands for support, and the R1, R2, R3 stands for resistance. So these support and resistance points are the points or the levels from where there is a very high probability that the prices will fall off or change its course. So let's say if the pivot point or the R1 level gets comfortably broken, then the next point where the markets can reverse its course is R2. So that is how you think about pivot points, and that is how you approach pivot points as an indicator. So rather than thinking, now this is very important, please pay attention. Rather than thinking that, okay, I will go short on this pivot point, the thought that should come to your mind is, when the price approaches this pivot point, what happens? So that's how you think about these indicators, and that's how you perceive about these indicators. The thing that people as a trader makes a mistake is they think that all these support and resistance levels should hold up. No. The thing that you need to frame in your mind is, okay, when the prices approach these levels, I'm supposed to observe what happens, and then I need to take the decision. So the conversation has changed from, okay, the prices have touched here and I'll go short, to the conversation has changed to, okay, the prices have reached over here, now I have to observe and see what's happening. If I see a good evidence of the prices to go short, then I'll go short. If I see the evidence of prices surviving above this level and going long, then I will go long. So that's the key to thinking about the decision making process in trading. So that's a little bit about the pivot points, and don't worry, I will make detailed video on each of these indicators to actually have a deep dive. So that's my settings for the pivot points and the Z-Lima. So normally moving averages are simple moving averages, exponential moving averages. But what happened is there is a lot of lag in the moving averages. So I found a really good custom script written by the community of TradingView, and let me show you. So if you go to indicators, right, and if you type zero lag exponential moving average, then if you go in detail, and then you can see over here this person has written a really nice calculated moving average which closely follows the prices. So the thesis is, I have included the zero lag EMA in my analysis, and this analysis I have chosen the period for 26 and the style as this color. Now the reason and the way you should think about it is the zero lag, if the price cuts the zero lag EMA on the downside, then you can expect a short-term bearish move. And if the price cuts the EMA on the upside, then you can expect a short-term bullish move. So that's the way you should interpret the moving averages. And now let's say you feel that it's too much overwhelming and there are lots of indicators. So TradingView provides a layered approach to the charts as well. So if you look at over here, my object tree or my visual tree is something like this. So I place a lot of importance to 5-day and 26-day. So that is my first layer. Then the candlesticks is a third layer, and then there are all the moving averages, as you can see, and all the other indicators that you can see over here. So according to the precedence, according to the importance of each and every indicator, you can layer down the visuality. So this feature of TradingView I really like, to have some indicators put forward and some indicators put backwards. So this way you can alter the positions of the object tree. So that's something about the zero lag EMA. Then I have the normal volume that is plotted downwards over here, as you can see. And then this volume is also accompanied with a 20 simple moving average. So over here you can see if the volume is above the 20 moving average, that means it is the volume is more than usual stuff. So that tells me that the move that is happening is has legs, and there is a lot of participation involved in that move. So it is very important to know that if there is any movement in the market and if it is not accompanied by the volume, then there is no point, because it will relapse. So also you can see over here that the prices went down but the volumes were still increasing. So that means there was a lot of bearish participants participating in this down move. Now always remember that price action is king. No worries, like everything is accepted, price is really important, but always remember price has knowledge. There is knowledge in price, but there is truth in volume. So if the price is telling you something but it is not accompanied by large amount of volume, then that thesis cannot be trusted more. So the whole point of getting all these indicators is having more data and more confirmation. So let's say that you are getting 7 to 8 indicators telling you one thing, then that is a big confluence. There is a big confirmation from more indicators telling the same thing. So confluence means you are having the same conclusion from multiple different indicators. That increases your conviction and in turn increases your probability of winning for your thesis. So for example, I'm getting a bullish signal from moving averages, right? And I'm also getting bullish signal from other 5 different averages, then I would be more confident to take a bullish call when I'm getting confluence through other indicators as well. So that's exactly my point over here. Do not rely on any single indicator. Always take confluence and always take congruence of the entirety of the data rather than focusing on one thing, because the mental bias tells you that if you are biased mentally on the bullish side, then you will only look at the indicators which are giving you bullish signal. So always be mindful of such tricks and be mindful of your own mind, and that is why this makes trading really difficult. So I'm here to actually tell you, and from the real life experiences, what to do, what to expect, and then how to look at the markets in a most unbiased way possible. So with that, let me show you the other 2 indicators that I use extensively, and that is these ones. So if I zoom out, you can see over here, I use the MFI, that is the money flow index over here. And then I use stochastic RSI over here. So the reason why I use money flow index is because to know the momentum of the markets. So the momentum of the markets can be derived by many indicators. But what I have experienced over the years is I have seen MFI, that is money flow index, act as a really nice indicator. It is 10 times much better than RSI and it's an oscillator indicator, which means it oscillates from 0 to 100. So this is the settings that I use. Its a length is 14, same as RSI, and the overbought and oversold levels are 20 and 80. And as I said, if you are someone who uses RSI, then I would highly recommend to use MFI, because it is much it gives much more clearer and more accurate results than RSI. And then I use stochastic RSI as well. The reason why I use stochastic is because as an intraday trader, you need to know, like, in the ultra short term, who are in control. So if you see over here, you saw that the stochastics are in overbought condition. So if they are in overbought conditions, then there is a very high chance that over the short term, the markets are going to go down, because you cannot survive on these levels for a long period of time. So there is a lot of things that you can derive for the ultra short term from stochastic indicator. So that is why I place this stochastic indicator over here to see the ultra short term momentum. For the normal momentum of the entire intraday, I use the MFI, that is money flow index. Sorry, I forgot to show you this. So these are the settings that I use for stochastic RSI, and these are the other color coding settings. And for the money flow index, these are the settings that I use, and these are the settings for the input data. So now you have pretty much everything you need for my system that I use to research on the trading view. So trading view, I have all these indicators for the research, and this is what I use to derive my buy and sell signals. So now, since the setting up or the configuration of the indicator part is done, now I will share you the actual strategy or the indicators or the game plan of step by step of how do I decide, and like I'll discuss the details of buy and sell decision making process, which I call as trading system or playbook or game plan, right? So let's now jump into the actual game plan using all these trading indicators and using all these inference. So now you have the data configured, but to take an inference from it and to know how to use it is an altogether a different skill. So let us discuss and delve deep into those final part as well. So I will share now my strategy on how to use these tools to actually make money. So now I have discussed everything that is related to TradingView regarding my strategy. Now, as I said you in the earlier part of this video, that for becoming a pro level day trader, TradingView is just a first step to analysis. But to actually become a pro level day trader, there are lots of features that TradingView currently, as a time of this recording, doesn't support. For example, TradingView doesn't support cumulative delta data and cumulative delta indicator. It also doesn't support the tick charts indicator. It also doesn't support the footprint charts indicator. Now, the TradingView doesn't support these indicators by default by their own, but there are some people who have written custom scripts that you can use to imitate the kind of data that I'm talking about. But the thing is, TradingView, is just a first step. It's not, providing that level of sophisticated, advanced analysis. So to address that, what I have done is I'm using MacBook Pro and I have installed something called as Parallels. So this is a virtualization software that you can install on MacBook Pro, and you can run Windows 11 on the Mac. And the reason why I have done this is because I have chosen the NinjaTrader platform. So first, let me show you the actual Windows that is installed using the Parallels desktop. So as you can see over here, this is my Windows 11 that is running on the Mac. And I have installed NinjaTrader application, which I have the brokerage account on, and I have the research and the analysis platform over here. So this is the NinjaTrader, and if I go to indicators and if I can show you, this is basically the indicator that I'm talking about, that is order flow, that is cumulative delta. So order flow is the category of the indicators, and cumulative delta is the name of the indicator that I'm going to use. Now, why do I use cumulative delta and why do I emphasize a lot on it? The reason is, cumulative delta is a measure of the difference between the aggressive buying and aggressive selling. So just to give you a gist, if the markets wants to go up, it doesn't go up because of the limit orders. It goes because of the market orders, that is aggressively lifting the ask, aggressively hitting the ask. So there is bid and then there is ask. So you have to aggressively buy all the ask on the ladder or on the dome to aggressively force the prices to go up. So I want to know what is happening on the transaction basis on the price ladder or the dome to actually come to a conclusion and see underneath the price action what is happening, and to gain the insights of those. And the best way to take that inference, or the best way to know the tectonic shift in the depths of the market, is having the access to the cumulative data or the order flow data feed. So unfortunately TradingView doesn't support it right now, so I had to I want to get these premium data. So that is how I have this is how I have gotten it. So I have a premium subscription to the lifetime access of the highest level data that is provided by NinjaTrader, and you can take any vendor and have the data, but I personally like NinjaTrader, and that's why I personally recommend it. So I'm no way or shape or form I'm affiliated with NinjaTrader, but it is just my personal choice. So over here, what you can see over here is this is a normal price action chart, that is a 5-minute candle charts on the top pan. And over here in the bottom pan, I have configured a cumulative delta indicator. So the conclusion or the inference that what you can see over here is as the price goes up over here, this is the starting of the session, that is 6:30, the price is going up, the cumulative delta is going up. So ideally I want to spot any discrepancies or any diversion that is taking place. So ideally the price and the cumulative delta should go hand in hand. If the price goes up, normally the cumulative delta should go up. But if the price is going up and the cumulative delta is not going up, then this signifies that the buyers are getting exhausted. So we need to be very cautious. So looking at the yesterday's data, that is Friday, look over here what has happened. So price is constantly making new highs, and over here when the price made the first high, and then over here the price made the second high, but look, the cumulative delta was not able to make the second high. It made a lower low. So that was the indication that the buyers are getting exhausted, and look at what happened afterwards. It was going down, right? And then you can see over here again the price tried to make a new high right over here, but at the same time you can see the delta made a new high, right? So if you consider this high of the price and this high of the price, it was making a lower high, right? And over here if you can see, the delta made an actual equal high. So what does that mean? That means delta is aggressively trying to go up, but at the same time the price is not able to go at the previous high. So that means the aggressive buying is getting absorbed by the limit order sellers that are sitting in this zone, right? So this is a very big indication that the prices are going to go lower because the buying pressure from the delta is getting absorbed by the limit buyers that are limit sellers that are sitting over here in this zone. So next thing what you can see over here is it went down. Why? Because delta was not able to push the prices at the highs of the day. So this is how delta functions. And normally what I tend to look for is the delta divergence. If the price is making new high but the delta is failing to make a new high, then that is an indication of divergence. That means if the delta is not failing to make a new high, that means the price will reverse back downside. So that's one of the key conclusions, and this is how I make the use of cumulative delta. That is a premium order flow tool that you can use from an advanced broker like NinjaTrader. I also use something called as footprint charts. Now let me show you and zoom in like what footprint chart actually is and how it functions. So footprint charts are basically each and every transaction that happens in the market gets recorded. So for over here, you can see that for each price level, it actually tells you how many transactions happened at that price level, what is the maximum number of transaction that happened in that candle. So all of this magnified data about the markets, you can see it in real time. So what is the benefit of it? It shows you the pulse of the market. It shows you actually how much and how strong are the orders on a particular level. So it is a kind of a magnified view of each candle. Don't worry, I'm going to create a detailed video on each of these layouts, but I just wanted to tell you that this is what I look and this is what I infer from while taking my buy and sell calls. So I'm looking at a lot of data and then making an informed decision. So also this is the third layout that I wanted to discuss with, which is the tick charts. Now, normally what you guys have seen is you have seen the time-based charts. That means each and every candle gets formed after a specific amount of time. For example, 5-minute candle, after every 5 minutes, a new candle will form. Now, there is another type of charting technique, which is a transaction based charting technique. So what I am looking over here is a tick chart. Now each tick means one transaction that is happening in the market. Now I have selected a setting of 1000 ticks. That means after every 1000 transactions, you will create, my charting software will create a candle. So for example, if I show you over here, this candle, right, this particular candle, the start of that candle is the price at which the first of the transaction started, and at the end of the 1000th transaction, the price was over here. So this candle represents 1000 transactions and the correlated price associated with those 1000 transactions. So why am I looking at transaction based chart rather than time based charts? So basically the tick charts tells you that the amount of transactions that are happening at a certain level, and it shows you a very leading data, that is if the transactions are happening really fast and if the moving averages of those transactions are giving me the crossover, then I need not wait for the candle, for the time based candle to complete. I can take the trade in advance to actually capitalize on the move that is happening. So this is a basic 10,000 foot overview of what I look for in these three different types of layout, that is the tick charts, the footprint charts, and the cumulative delta layout on my NinjaTrader platform. So this is the type of analysis that I do. These are my settings, and feel free to take a screenshot and explore all these things. I am definitely going to make a detailed video, but I wanted to show you what all things are necessary for you to become a pro level day trader. And always remember, all these studies and these observations are coming from a simple thesis that the more you observe the markets, the more you get acquainted with the price. And the best neural network that you can train is your brain. So the more screen time you have, the more muscle memory you have in seeing the markets and merely observing the markets, that creates an enormous amount of edge, and that puts you in a very nice situation in front of other traders. So that's my take on my actual professional setup as far as day trading is concerned. And now finally I will talk about my strategy or the game plan that you can see over here. So now we will start discussing the actual strategy and the actionable steps that you can take, and using which you can earn and you can have really good returns. So let's start with the trading strategy. So I wanted to share the actual game plan, and I wanted to divide it in the form of steps, so that you can have an actionable insights and also a step-by-step systematic approach to how to think about the regular trading session and what decisions should you make and upon which data should you rely. So let's go to the first step. So this is my trading strategy, and my first step is very, very important. It is basically summarizing to do us the homework for the coming tomorrow's trading session, regular trading session. So what homework am I telling you to do? It is to know the important levels of the multiple time frames and make a note of it so that you can be aware of what to expect if the things turn into your favor. So over here, I have mentioned three time frames. One is the weekly, daily, hourly, and intraday levels. Now, I want to, understand that tomorrow on the weekly basis, on the daily basis, and on the hourly basis, what are the levels that I need to be mindful of. So if I go to the charts and if I go to the weekly time frame, so this is my weekly time frame. So in this weekly time frame, I want to know two things: the levels that are important on the upside and the levels that are important on the downside. So when I'm doing my research and when I'm doing my homework, how do I realize that, okay, what levels do I need to consider? So I have all the indicators that I have mentioned in the previous section of this video, and according to that, I will tell you as of the time of this recording, this day, that is for tomorrow's trading session, I will be really mindful of the top layer, the upside resistance, that is the top of the Bollinger Band, and I would be really mindful of the 5-day EMA on the weekly time frame. So to simplify this, what I have done is, this is my Apple Notes, and what I have done is I have mentioned the pre-market analysis for the sake of simplicity. So over here on the weekly levels, on the upside, on the downside, and from where I am deriving these levels. So this is from the top of the Bollinger Band, the downside is from the 5 EMA. So I have written the weekly levels. Now let us check out the daily levels. So in the daily levels, over here you can see these daily levels are derived from two things. Firstly, I am looking for the previous day's high and previous day's low. So previous day's high will act as an interim resistance, and the previous day's low will act as a interim support. So when I say interim, means temporary. So I would be very, very mindful, and my radars will be very, very active to see when the price approaches this previous day's high, how does it behave? If it behaves sustainably, if it if it's able to blast off above this level, then I would be interested in going long. And if it goes below this level, then I would be interested in going short. And you might say, fundamentally, like, why is this previous day's high and previous day's low level important? It is important because remember that more than 80% of the market trading are handled by algos, and majority of the algos, if they see a breakout on the upside or the downside of these levels, then they will be actively taking positions and taking shorts over here and taking longs over here. So we need to understand the not only who are the market participants, but also the behavior of the market participants. So that's that. So over here, as you can see on the daily level, I have mentioned the 17,024 on the upside. Now, where did I derive this level from? So as you can see, since last few days, we are consolidating in a range. Now, whenever the market consolidates in a range, I normally tend to mark the top of the range and the bottom of the range. So as you can see over here, the top of the range is this starting of the red bar that is over here, that is 17,024. As you can see over here, that's the upside. And to the downside, this is the downside, that is 16,764. And over here, this is the bottom of the range, but in between there is a big level of short-term support, that is the 5-day EMA. So as you can see over here, this blue line is the 5-day EMA. So the interim support is sitting at 16,940 around. So over here, that's exactly what I have mentioned on the daily time frame, and I have also mentioned the previous day's high and previous day's low. Now, one key important aspect that I wanted you guys to understand is, when you go to the intraday 5-minute charts, also look at the hourly time frame. So if I go to the hourly time frame, you can see over here I have derived my first level of support and first strong level of resistance over here. So this dominant red line that you see over here is derived from a standard pivot point on an hourly level. So this is going to be my strong resistance going forward in this week. And this strong green line that you see over here corresponds to the strong support zone for this week. So I have mentioned both of these levels over here on the upside and on the downside. And I have also mentioned like where did I derive these levels from. So R1 and S1 of the pivot levels. So now holistically, going into tomorrow's trading session, you have a fair idea about all the important levels on almost all time frames. So you have covered multiple time frames. You have covered both the upside levels and the downside levels. And also now you know the previous day's levels as well, and also the range. So now looking at the daily chart, as you can see, I have constructed this dotted line for the previous day's high and previous day's low, and I have also noted down this range. So when I draw this box, you will realize that this is the consolidation zone that we are chopping around. So if we are sustaining comfortably above these levels, then I'm going to think for the long call. And if we are breaking down, then I will think of going short after losing the 5-day EMA. So that's my game plan going into tomorrow. So it is very, very essential for all the traders to do their due diligence even before the regular trading session starts. So note down the important levels, make a table like these so that you can be very well prepared about your expectations about how the market behaves and till what level market can fall. So one thing to note is for Nasdaq futures contracts, to have a day like 1% or 2% day is very, very natural. So Nasdaq is such an instrument where you can easily get a 2% or 2.5% day. So don't be very, very optimistic that these levels should hold. Many a times these levels will not hold. So to catch the real direction of the trend is important. So that makes me go to the second point of our strategy. So whenever there is a start of the trend, make sure that you have a combination of EMAs that can tell you what the trend is. So we will discuss that, but before, so this is the homework that we do prior to entering into the trading session. The second homework, or the second mostly very, very important and very disciplined principle that I have learned over the years is always make a note of market moving news events that is going to happen tomorrow. So what do I mean by this? So let me explain you. So this is the economic calendar, and today, as you can see, is 25th of December. Now for tomorrow's trading session, I should be very, very aware of the pre-market news and the post-market news. So as you can see over here in the pre-market, there is a lot of news. On the 6 o'clock also there is a lot of news. So just a small disclaimer, I'm in the Pacific time zones, so all the time that you see over here is of the Pacific time zone, PST. So as you can see over here, my regular market session starts from 6:30 in the morning. So after 6:30, I can see that there is only one major news, that is Dallas Fed Manufacturing Index. So my thesis or my game plan going into tomorrow is, even if the regular market trading session starts at 6:30, I am 100% disciplined to not trade after till 7:30. So once the 7:30 happens, once the news data releases is done, once we have 1 or 2 5-minute candles after the news data release, only then the market tends to reveal its real trend. So we have to wait till the market opens all its cards and reveal the real trend. So this is my game plan. So if you see about the 3-month bill auction and 6-month bill auction, you also have to know that what kind of news can affect the markets. So many a times there are crude oil data releases, many a times there are these treasury bond auctions and everything. So not all of the newses are heavily market moving for Nasdaq futures. So you have to know like till what news you have to wait. So over here, as far as today is concerned, I'll be waiting for only 7:30, that is Dallas Fed Manufacturing Index. So the second point summarize that if you trade enough since years, then you'll realize that the first 45 to 60 minutes, normally all the major news data releases are either in the pre-market or in the first 45 to 60 minutes. So I normally, tend to not trade in the first 45 to 60 minutes, and that is an iron rule of my strategy. So after that, you will see a clear direction of the markets, like if they are, if they want to go up, if they want to go down. And because before the news events, there is a lot of confusion and lot of consolidation and lot of chop. So once the news event is out, once the news data is out, the markets will have a clear direction and you will have a very clean trade. So that is my, third point, that if possible, I would highly recommend you guys to not trade for the first 45 to 60 minutes, as it is going to trigger a lot of stop losses and a lot of, big wicks formation happens. So rather, I would just sit and relax and look at the market and see what is going on and observe from the movements. So these are the first 3 points of my strategy. So now let us go to the fourth step. Okay. So till this stage, we have a good background of where to expect the market to go and till what limit. So my step 4 is going to be this. Always wait for the markets for all the news data releases, and then see where is the crossover and where is the nearby pivot levels. So the main crossover that I emphasize on is the 5-day and the 26-day EMA. Now, if the 5-day crosses the 26-day EMA from below, then that would be considered bullish. If the 5-day EMA crosses the 26-day EMA from the top, then that would be considered bearish. So always look after the first 45 to 60 minutes if there is any crossover that is happening. Or if there is no crossover that is happening after 1 hour, then see which is the latest crossover and look at the direction of that crossover, if it's a bullish crossover or a bearish crossover. And always, for how long can the move get extended, look for the nearby pivot levels. If it's a support level, then look for a shorter entry and the target should be the support level. And if it's a long entry, then look for the resistance level and the target should be the resistance level of the pivot points. So the crossover, the bullish crossover and the bearish crossover from the EMAs and the pivot level forms a very essential and important part of my strategy. So once, let's say, after 45 minutes or 1 hour, the news data get released, take a trade in the direction of the crossovers, in the direction of the EMA. So if we have a latest EMA crossover as bullish, then take a long call and the target should be the pivot level. So that is the fourth step. The fifth step is to have like, okay, now if I am in a position, then how long should I wait to cut my position, or how long should I wait to book my profits? So my personal recommendation is, since I trade in the futures products and they have an inbuilt leverage, I am happy if I get 5 to 15 points. So if I, let's say, have a position for a long call or a short call, and if my position goes in the favor of me for, let's say, 5 to 20 points, then I'm happy to cut my position over there. So my target is going to be 5 to 15 points. So once my position goes in favor of me more than 5 points, then I will straight away deploy a trailing target order. So in worst case scenario, at least I will get 5 points. So if you consider futures products and if you consider Nasdaq futures, for one contract, if it goes 5 points in your favor, it is $100. And my position size is normally 2 to 5 contracts. So if it goes in your favor for 5 points, then you can easily make, $300 to $500 depending on the position size that you have. So that's the fifth point. Now, the sixth point is, let's say you are taking a long call. So always take the confirmation or the confluence from the cumulative delta. So if the trade is going in your favor and if the cumulative delta supports that trade, so for example, if you have long on a position and if cumulative delta is rising, then that reaffirms your thesis that your position is, backed by aggressive buying, which is shown by cumulative delta. And let's say if you have a short call, then ideally you should see cumulative delta going down. Why? Because you want to have a confirmation that you are short, and that confirmation should come from cumulative delta that aggressive sellers are, participating while you are in the trade. So one other key confirmation can come from cumulative delta, and you can, if you want to take a preemptive preemptive trade. If you want to take a, let's say it is approaching a pivot level which is also a daily resistance, then ideally you want to see a divergence between the price and the cumulative delta, and that should support your thesis that markets should reverse. So more and more indicators that can support your position in your direction, the better probability of your trade winning happens. So the third point in this slide, or the fourth point in this slide, is see the tick charts and footprint charts and make sure that they are in the favor of EMAs. So for the tick charts, it's very fast moving. So it tracks the transactions. So what I did personally is I plotted the tick charts, and then I to see or recognize the trend of the tick charts, I have plotted 5-day and 26-day EMA on those tick charts, so that I can see and spot the bullish and bearish crossovers whenever it occurs on the tick charts. So for example, let's say if I'm on the long call, and let's say I want to take the confirmation from the tick charts as well, then on the tick charts also the trend should be positive, and the bullish crossover must have happened, and you show that way you get another layer of confirmation. Regarding the footprint charts, you can take the confirmation in a way that the POC of each candle, that is the point of control of each candle on the footprint chart, is rising. What does that signify? That signifies that increasing amount of market participants are participating in the up move. So that's what it signifies. And don't worry, I'm going to show you each and everything in detail. So on the charts as well. So I just wanted to get this points out, so that you make sure that you are getting all the information and all the confluence from the different tools that we use. So that's point number 7. Also, we track the correlated assets as well. So the two main correlated asset that I track personally is QQQ and VIX. So QQQ is basically the ETF that closely tracks Nasdaq index. So for many a times what happens is there is a contract switch, or there is an expiration date, and a lot of things that distort the price behavior and thereby distorting the pivot levels. So many a times the pivot levels of QQQ product get respected and not the Nasdaq Futures product. So you need to know simultaneously that what QQQ is doing, and you need to know that the equity segment, if they are facing an immediate resistance, and that resistance, if it's not showing on the Nasdaq Futures chart, then you need to be mindful that over here the prices will stall. So be mindful of the QQQ pivot level as well. And then next point is always remember, be very disciplined, and don't be in any position before or after news data releases. So many a times you will experience, if you have traded for a long amount of time, that there are certain events like non-farm payroll data releases, CPI data releases, inflation numbers. Many a times Fed Chair Jerome Powell is speaking. So all those events are highly volatile. So I don't recommend to be in the position while these events are happening. Let this event happen, let the news be digested in the market, let the effect be over, and then actually take the position on the real ingrowing trend. So that's my humble recommendation. Please follow it. Next, always have trailing target orders as your friend. The reason why I'm telling you this is because once the position goes in your favor and you have jot down, or you have done the trailing target, then the max you can lose is the trailing target that you have put. So in any case, you bring back home a little bit of money whatsoever. So that is very important, to book little bit of money. So normally the thumb rule that I swear by is, if the position goes in my favor more than 5 points, then immediately my trailing target order goes from the 5 points. So that's who I am, and that's what I swear by. Also, I track a lot about the volatility index. So as you know, like VIX is an instrument which tracks the volatility of S&P 500. For the same purpose, VXN is specifically an instrument which is volatility for Nasdaq contracts. So I track VXN very closely, and both the Nasdaq contracts and VXN are inversely correlated. So what do I mean over here? I mean, when the volatility, that is VXN, goes up, ideally the Nasdaq should go down, and when the Nasdaq is going up, ideally you should see that a volatility or VXN is going down. So let's say that if VXN is approaching a big level of resistance, then you should expect that markets should go up from that point. Why? Because if the Nasdaq is approaching a big level of resistance, then there is a very high probability that the Nasdaq contracts will reverse its position and go up from that point. So that is how this inverse correlation works. So this is, priceless 11 points of my strategy. So now it is time for me to show you for multiple days how all these points, how all this system, and how all this strategy come together, and I will put all these points to work and show you in real time how does it apply to the charts and everything. And I will go back of the latest data, and I will show you what are the opportunities that you could have capitalized on and how you can use this strategy for your advantage. So let us dive into the back testing, because with me saying that my strategy works, it doesn't happen. So if I give you the proof of the latest data, then you will have a confidence to actually believe and see for your own self that how the strategy works. I have spent 4 years to construct this strategy and to work on this system. So it really works. I have extensively backtested it, but just for the purpose of this video, what we will do is, if time permits, we'll do 3 days of backtesting, and then as a homework, you can do another 10-15 days of backtesting using the same rules. So over here, just to summarize, starting from the point number 1 to the third slide, that is point number 11, this is the entire strategy. Now you may say that it's too long or too complicated. Let me tell you very frankly, like anything which is very simple and very easy probably won't work. So it involves a lot of hard work, it involves a lot of strategy, it involves a lot of thinking. So the idea that I can see a little 2-3 things and then I will make the money, it's not the case. So I want to be real. I want to show you the real exercise and the real things that will make you a really good thinker and a pro level trader. So without further ado, let's jump on to the backtesting and let us test this strategy so that I will go point by point for the past data to show you how it works and how you can take the advantage of it. Now, one disclaimer: no strategy is a holy grail. Like, you will face a period or scenario where your stop losses will be triggered, but over the course of time, let's say if you take a series of 15 to 20 trades, you will be profitable, and most of the time you will be winning. So the ratio is winning ratio is very high. So with that being said, there is no holy grail in the world, and I keep on working on this strategy to fine tune it, to change the parameters, to increase the accuracy. So it's a work in progress, but finally I'm at a point where I can share this to actually people to actually take a benefit of it. So please pay a very close attention to the section coming now, because I will test each and every point, and I will show you for the last 3 days how the strategy works and how you need to think about it. So in this video, I have already shared the actual know-how of the strategy or the system. And since this is turning out to be a very big video, what I'm going to do is I'm going to create a part 2 video in which I will focus specifically on backtesting. So I will cover the entire backtesting in the next video, that is the part 2 of this video. But for now, you have gained a lot of knowledge and lot of experience regarding the system building in the trading. So until next time, I would like to thank you for watching, and I would like to request you guys to like, share, and subscribe so that YouTube, promotes this video and more traders enable themselves with this priceless knowledge. So if you find value in this content, please support the channel and hit that like button.